Good morning, good morning, good morning, everybody. Let's raise this seat on up. Happy, what is it, Friday Eve, May 2nd, 2024. Welcome to the Premarket Prep session. We're here every single day, right? Every single day to make sure that we're laying out that game plan when it comes to trading markets, going over news, analysis, data, insight, commentary, all of those factors, all those variables that are important to factor into your final equation when you look at how you attack markets each and every day. I'm your host, Adam Holland, stock options expert market strategist, but also just proponent of that 1% movement, that Kaizen movement, right? As you see here on the shirt today. And that's what I'm going to be repping nonstop to and through the Kaizen live event that we're going to have June 19th through the 21st. So I know a lot of you are already signed up for that. If you're not, make sure you are. I don't do many, live teachings, multi-day mastermind type setups. Usually, my one-on-one time comes at a premium, right? You guys know my charge for one-on-one sessions, and this is essentially that. An intensive of multiple hours of us going through what's coming up on the crest of the next wave, right? If I were to sum it up, we crushed trading markets yesterday quite easily, I might add, because of this principle of Kaizen, which just like it says here, right? I love that Alicia said, loving the shirt. The philosophy of constant improvement every day, right? This is the philosophy of constant improvement. Every day is an opportunity to improve, even if it's only by 1%. It's not about being invincible. It's about being unstoppable, right? That is the whole point. It's not that we won't miss trades. It's not that you won't miss out on certain waves. It's not that you won't miss certain moves of different asset classes, right? It's the fact that you won't stop. It's not that there won't be updates and changes in the world to make you feel insecure. There won't be things that evolve that disturb your place in the hierarchy of existence. It's not that. It's the fact that you don't stop in spite of that. That's what Kaizen is about, and that's what this community is about. And it was on full display yesterday, right? As we sat through and did not waste buying power and mental capital on the chop that we got in the beginning part of the day. We leveraged that inevitable pop that we get, right, when the FOMC minutes are dropped. And then we faded the first move once Powell started talking and made money to the upside on calls, right? Had a nice base hit off the initial pop. Had a beautiful home run off of fading that first move down on Powell and riding calls up, and then exited at the perfect spot. That doesn't happen by luck, right? Luck is when preparation meets opportunity. We prepared, right, by getting 1% better each and every day. Kaizen is what guided me to the ability to execute yesterday with surgical precision, right? So that's what we're aiming toward each and every day. You don't wake up and then on the most volatile days of the quarter, right, which is the Fed days, right? You don't wake up and then on the Fed days, you suddenly just know how to navigate them. It's 1% better each and every time. It took me so long to recognize each stage of that happening, right? Years and hours and hours and hours of just pushing through, being vigilant, getting 1% better, noticing small things. And then that culminates in, the mastery that has to inevitably evolve along with how things continue to evolve in this world, right? So that's what we're pushing for, constant evolution, not falling asleep at the wheel. Make sure that you are learning how to make your money work for you and learning how to use AI. Those are the two most important things right now during this time of extreme elevated and elongated inflation, and AI completely disturbing, disrupting, and upending a lot of the current systems and processes that are in place and taking out a lot of jobs along the way. Doesn't mean a lot more won't be created, but you know what? The jobs that will be most valuable are the ones that know how to utilize, integrate, leverage artificial intelligence. So if you want to learn about stocks, you want to learn about AI, I'm betterdaily.com. That's where you need to go. That's where you need to be. And without further ado, since this is the movement that presents each and every session that I do every morning here, giving out these gems for free, this is the movement that, presents that. So got to give it the shout out. But now we're going to move on to our top news, our stock related news for this fine Thursday. And our top news is as it may. So I'll repost the reel today as I do every May. But there's a famous adage on Wall Street called sell in May and go away. But investors are analyzing if the strategy still holds any merit. The investment approach posits that stocks tend to underperform in the 6 months through October. So investors should convert to cash and start at the start of May and then buy the dip later in the fall. The origins of the saying go back quite a while, with reasons ranging from vacation cycles to bonus allocations, and others noting that the worst market crashes of 1929 and Black Monday in 1987 occurred during this period. So, there are like kind of historical anecdotal pieces of information that push this forward. The great thing about options is that, again, you can make money if the market's going up, down, or sideways, right? You can use this tool in a variety of different ways, just like we did yesterday for a grand total of like a 30-minute workday, instead of slaving over the computer nonstop. How you use the tools is much more important than the tools themselves, right? We want to be John Wick with a pencil. I don't know if you've seen John Wick. If you haven't, it's a good watch if you like action films. If you don't, probably not. But I'd rather be John Wick with a pencil than, an NPC with an AK-47, right? Or an extra on a TV show with an AK-47. Everyone is so focused on, all right, I'm gonna, pay $2,500 a month for this algorithm, and I'm gonna use, this platform, and I'm gonna make sure that I have this computer, and I need to have 5 screens, and I need to have, 10G internet connection, and you're like that person that has like the most expensive armor in battle, and you just get destroyed immediately by some like finely tuned but like horribly raised like street rat with a rusty knife. Like, that's what it is. It's like it doesn't matter the tool as much if you don't know how to use it. And the people that rely the most on the tools often end up being the weakest when it comes to execution. I try to rely on as little tools as possible, right? Price action, that's what you want to focus on. How do things move? Because you try and use algorithms and all this other stuff, you're just going to end up running yourself in circles. Um, so let's see here. In terms of thought bubble, many academic papers and market research have been written on the subject with breakdowns by stock class or time periods. While seasonal patterns do exist and equities could face some increased risk in the summer months, they still tend to go up over the long term despite additional volatility. Staying fully invested could prove safer than trying to time the market in any given year. And there are countless indicators out there for better portfolio decisions, such as earnings, valuations, and the direction of interest rates. The sell in May and go away adage has a weak track record over the past 40 years, with the S&P 500 having positive returns in over 75% of summer periods, writes Lawrence Fuller, investing group leader of the Portfolio Architect. The S&P 500 has historically finished the year higher when the first 4 months posted a gain, supporting a continuation of the bull market. And that's exactly what has happened here. So, unconvinced. If anything, the bears have been pointing to the outsized market gains seen since late October, and the latest top hit in late March. In only 5 months, the S&P 500 index soared nearly 28% to hit a peak of 5,264 before slumping 4% in April. Right, so still up 24% on the year. Dip buyers may still be waiting for the too far, too fast rally to fizzle before inching back into the market, especially given a new period of inflation uncertainty, slowing consumer spending and GDP, and signs of waning risk appetite. So everybody says, Adam, some people say sell in May and go away. And then, they say that, oh, that's been disproven. What should I do? I like making things typically in life, whenever the situation is really complicated, you just need to make it as simple as possible, right? What should you continue to do? The same thing you would do if it was a month that was historically bullish or a month that was historically bearish. You watch the charts, right? It's as simple as that. It's like all of that stuff doesn't matter as long as you are addressing the root, right? What if the market goes up? Cool, the charts will tell me. What if the market goes down? Cool, the charts will tell me. What if the market goes sideways? Cool, the charts will tell me. It's like as long as you focus on the charts, it does not matter which direction the market goes, you'll know, right? And you might get caught off guard once, twice, 3 times, but you're going to get back on track. And the majority of the time, you will be in the right direction, on the right side of things. So I don't really like it's nice to know. It's nice anecdotal evidence, like, oh, cool, selling may and go away. And then it's like, oh, it's been disproven a few times. I'm not gonna sit here and say, oh, because this person in 1965 said selling may and go away, I'm gonna sell my stocks. No. Right. Especially given the performance that we've had this year and us still being up 24% on the year. It's just one of those things where I will continue to trade, right? Short term, I'll adjust my expectations and the way that I'm trading, which we've already done. But long term, I'm not making any decisions like, oh, it's time for me to sell, all my Apple stock, or time for me to sell all my Nvidia or all my Tesla because sell in May and go away. No, right? Keep those long term positions where they're at. let them rock out because we'll likely finish this year higher. But it's nice to know, right? And I'll repost that same reel here today. Make sure to check that out. Got lots of good information in that. Central banking, lack of progress. Recent data showing higher than desired inflation means it will take more time for the Fed to gain confidence that price pressures are sustainably easing. That was the main message coming out of Jay Powell's FOMC presser on Wednesday, where he dismissed the talk of stagflation after the central bank maintained its key interest rate at 5.25% to 5.5% for the sixth consecutive meeting. The FOMC also decided to ease quantitative tightening by slowing the pace of its balance sheet runoff, pushing Treasury yields lower. Powell adopted a more dovish tone, noted Seeking Alpha analyst Christopher Robb, but also expressed confidence that long-term inflation expectations are anchored. Yeah, I mean, we heard from Powell what we thought we'd hear from Powell, which is him trying to soften the blow as much as possible, right? This isn't where they want it to be, and he's not making any qualms about that or cutting any cards about that. He's like, look, I didn't want to be here, but at the end of the day, he's not going to sit here and be hawkish when he knows that that's not in his best interest. They're looking to cut. They're looking for the market, for data, for things to give them just the littlest bit of leeway to cut. And then my man is activating Edward Scissorhands mode, but he needs the market to give him that inclination. But yeah, there was no real good news that came out of yesterday. And that's why it's not a shock that, we hit resistance and we sold right back off. But all you need is that little bit of movement to be able to identify the levels, right? We called the exact top to the cent of where we topped out yesterday, right? Put in a shooting star on the 5-minute chart right at that 507.63, which was a significant price level in the previous days, right? So it's really all about just knowing how to read charts. Look left, see what a relevant level is, know how markets and people behave. When you're studying markets, you're really studying people, right? It's just markets are just kind of a quantitative measure or kind of just an agglomeration of the sentiment of the American people or investors when it comes to these companies. How are people feeling? Right? How do people move? How do people work? And a lot of that goes into understanding how markets move, right? So great day yesterday, even though I know yesterday destroyed some people. And that's what you have to be thankful for is even if you say, oh, well, it was my first time in a Fed day and I'm new to this and I didn't take part, in executing, but you got the experience to see how that worked, right? And I took the time yesterday morning to go through and live trade last Fed day that we had. And we moved yesterday exactly how we did on the previous Fed day, right? Which is an extreme blessing. And some might call it lucky, but luck is when preparation meets opportunity, right? So when you prepare, like we did yesterday by going through the last Fed day and we say, okay, the first half of the day, we really don't do anything, right? Net movement on the hourly, we end up in the exact same spot really is where we open. And then when that FOMC, minutes come out at 2 p.m., we always get a pop. Might last for 30 seconds. It might last for a few minutes, right? But we always get that pop. So I gave the strategy in order to leverage, that movement, right? It's quick. It's a quick little degenerate type day trade, but it hits every time, right? And then when Powell comes out, as soon as he starts talking, the market's going to move one way. That way is the way that you want to fade, meaning do the opposite, right? So when he came out, he starts talking, market dropped. Where do we drop? Right to a relevant support level from earlier on during the day. And we put in a nice bullish reversal candle called a hammer candlestick right off of support. It was literally the layup after layup after layup of green lights that we were able to leverage and bring home a fat payday, taking most of the day off, right? Which is where you want to get to with your trading. You don't want to the object here is not to sit and stare at charts all day. That is not the object. The object is to understand, okay, when I have the luxury of knowing the majority of what will happen during the day, let me make sure I understand what the game plan is, right? Preparation meets opportunity. That's luck. I prepare. And then I'm ready when the opportunity strikes. So at 157, I know what I'm looking to get into for when 2 p.m. hits. I'm also got I have my closing order open as soon as 2 p.m. hits, so I can go ahead and take profit, right, off that quick pop up. Then when Powell comes on, I make sure I have my relevant levels marked off. We drop to it, and especially if we put in a reversal candle, I'm in, right? So in the case of yesterday, we dropped when he came on, which means that the move I want to take advantage of is the upside move. We're going to drop to support. I want to get in there at support and then ride it up. And then where do I want to exit? At a relevant level, right? A relevant level, which was outlined yesterday. And that 507.63 is exactly where we stopped. And then we tanked all the way back down pretty much to where we opened at. Right. So it's like we didn't do anything over the course of all of yesterday, but if you wanted to day trade it, there was plenty of opportunity. And it all came from the charts, right? And from leveraging that blueprint. So regardless of what Powell says, right, whether he's hawkish or he's dovish, Fed days pretty much all work by that blueprint. So don't ask for lack of volatility or lack of craziness. Ask for the blueprint. And then once you get the blueprint, execute the blueprint, right? Make it simple and you're able to win just like we won a fat bag yesterday on spot calls, right? Spot calls for the quick pop, spot calls for the home run. Let's keep that up, right? Keep that up. Takes patience, takes commitment, takes Kaizen. 1% better daily. Did not happen overnight, that's for sure. Healthcare industry heavyweight. It's hard to trade earnings. Shares of Novo Nordisk fell more than 3%. If you remember, I liked Novo Nordisk. I didn't play their earnings. Had a busy day yesterday. Didn't play their earnings, but it's not like something you haven't heard me say before. If you are willing to flush it down the toilet, don't play it on earnings. Shares of Novo Nordisk fell more than 3% in pre-market trading despite an outlook boost on the back of strong Q1 results. This smells fishy. Smells like we might want to look at Novo Nordisk get open, right? This is kind of like, what was it, Meta? Like Meta beat and then they dropped and it was kind of unwarranted. This might be the same thing with Novo. So it might be worth taking a look at Novo here at the open because it seems like they're kind of getting an unfair knee-jerk reaction, falling 3% after an outlook boost, meaning their guidance looks good moving forward and they've got strong quarter 1 results. So like why drop? The performance was driven by increased demand for Novo Nordisk's blockbuster GLP-1 weight loss drug Ozempic and Wegovy, which have taken the industry by storm and sent the stock flying. The Danish drug maker still faces stiff competition in the weight loss drug market from Eli Lilly, whose ticker is LLY, which has been which has seen surging demand for its GLP-1s. Novo also warned of continued pricing pressures on its diabetes and obesity drugs, as well as supply constraints and shortages. So maybe that's why they fell more than 3%, but still not seeming very warranted. So let's take a peek, see what they're looking like. Yeah, yeah. No, I mean now they're not even down 3%. Yeah, I feel like interesting enough. Interesting enough to take a look at here. Novo. Yep, could be a nice little post earnings play move, especially if we drop down to pre-market low, do a little peak below and fail. Can ride that up from pre-market low around 124.34 up to pre-market high 132.85. That's if we get that. We might not get the peak below on pre-market fail, but or on the pre-market level, but something to keep in mind. All righty, let's get back to it. Energy, big oil gets bigger. M&A activity in the Permian Basin is progressing, with the FTC poised to approve ExxonMobil's $60 billion purchase of Pioneer Natural Resources, ticker PXD, after the companies agreed to minor concessions. The approval is likely within days, but it will be reportedly conditioned on Pioneer founder and former CEO Scott Sheffield not joining Exxon's board as planned. The all-stock deal was announced in October and would make Exxon the most dominant producer in the region. Pioneer is the Permian's largest operator at 9% of gross production, while Exxon's is number 5 at 6% gross production. We'll see. I don't think any of this stuff goes through. It says the FTC is poised to approve, but it's like I feel like just everything gets struck down. So we'll see if it stands and what happens. But now is a tough time to be a company trying to buy another company, especially if you're already a big company. In terms of today's markets, let me see, is all this relevant still? All right. Yeah, pretty relevant enough to go over. All right, in Asia, Japan, we're down 0.1%, Hong Kong up 2.5%, China down 0.3%, India up 0.2%, the FTSE in London up 0.4%, Paris down 0.7%, Frankfurt up 0.1%, the Dow up 0.5%, S&P up 0.7%, Nasdaq up 0.9%, crude up 0.6%, gold down 0.2%, Bitcoin up 0.3% to 57,822. Isn't it crazy how we called the top of Bitcoin like the short-term top? Like literally at the beginning of April, was like, hey, taking profit on some crypto here, because typically that month heading into the halving and after the halving, crypto drops. and we took profit up in the 70,000s on Bitcoin, and now it's down beneath 60. Like, being here is such a huge asset. Having this Kaizen mindset is such a huge asset. I'm not a crypto guy, but when you devote yourself to the charts, right, it just makes it easier no matter what you do, whether it's futures or Forex or whatever. Stop hopping around from thing to thing to thing to thing and focus on the charts. Focus on the charts, and also just doing your own research and understanding how things, don't get caught up in hype and self-confirming bias, right? If you believe something to be true, search for other reasons why it might not be true, and then weigh that with the charts. Don't just say, oh, this person says Bitcoin's going to crush it, and this person says it's going to crush it. This person, yeah, a lot of people say that, right? But understand the dynamics behind it. Yes, I believe that Bitcoin will continue to crush it, right? Upward to 100K, all that great stuff. It's just a matter of short term what happens, and not a lot of people like to address that as much because it takes more technical knowledge, right? It takes more of you being locked in with the charts, understanding the technical aspects of charting, and not just a plethora of YouTube videos where everybody jumps on the same bandwagon, right? The reason why I think that's important is because of expectations. Just let people know from the get, okay, this is what it could be. Like with zero dates yesterday, it's the riskiest thing possible to play zero dates, right? They expired that day. It's the riskiest thing possible. Yes, there could be big profit, just like we had yesterday. But I want everyone to know that, to make sure the expectations are correct. It's the same thing with long swings, right? Long swings can pay immensely, but they're called long swings and leaps for a reason. They take time. You got to let them simmer, let them cook. Try and lay out those expectations as best I can. Same thing when it came to crypto, right? When it came to Bitcoin, and it's hitting. Okay, cool. This is what I expect from it moving forward, short term, right? Short term, in order to help people so that they're not, kind of let down and deflated when that happens. Because a lot of people are like, man, what happened? Like, I got in the last month before the halving. It was this big event. It was supposed to go crazy. And they didn't know that, how the price typically moves. Is it a bad investment? No. But can it make them feel bad? Yes, because of the expectations. It's like if you go in and, there's something that goes fastest burger in the world. And you go in, awesome, let me get a burger. Okay, cool. You get your burger, but it's a 30-minute wait. You're like, this was a good burger, but I had to wait for a lot longer than I thought I did. So the expectations makes your experience negative, right? You want to make sure that the expectations are set up correctly so the experience is positive. So for anybody who did, you say, oh, I bought the top again. As long as you're there for a long-term investment, cool. If you were there to get a quick buck, that was not the way to do it, right? Oftentimes when you try to get the quick buck without knowledge and a system, that's when you lose more money. In terms of today's data and what we got going on, nothing very important, but we do have big earnings still remaining for the rest of this week. Let me check. Might as well check here. I mean, obviously Apple, right? Apple's going to be huge, but we've got a few other names reporting. All right, so Thursday before open, right? Just now we had Novo Nordisk, Moderna, Peloton, ConocoPhillips, Penn Entertainment, Wayfair, Cigna, Shake Shack, and Regeneron. After close today, we've got Apple, we've got Coinbase, we've got Block, right, formerly known as Square, DraftKings, Cloudflare, Fortinet, Bill, Booking.com, Amgen, and Expedia. So we've got big names reporting: DraftKings, Block, Apple, Coinbase, right? Huge names. And then Friday, not as big, right? Today is definitely the climax. But Hershey, Fubo, XPO, Fluor. Let's see what else. Yeah, no real. Only Hershey is like the most well known one there. Hershey and Fubo, probably well known and well traded. But yeah, one of the biggest companies in the world, Apple, one of the most influential companies in the world, reporting here today after close. So that will be very important, right? All of this week, this is the most difficult trading week possible because we've got all the big tech earnings, most of them, right? And then we've got Powell reporting, and we've got a plethora of economic data. Right. So if you're looking and you say, Adam, I tried to trade this week solo, I haven't been tuned in, I've been struggling, or I have been tuned in and I've been struggling, also make sure to give yourself grace. Right. This isn't a normal week in markets at all. Right. If you decided to go heavy and you're trading left and right, or you're just getting back into things, it's like you saying, all right, I'm going to go to Lifetime Fitness and play basketball. Right. First time in a few years, but I'm going to go there. And that happens to be the same day that LeBron and freaking KD are in there playing pickup. And it's like, wow, of course, this is the time that I decide to pick up the ball again. Right. So just understand that as well. And if it was, on the flip side, a tough week, you're like, this wasn't my best week. It wasn't a lot of people's best week. Even hedge funds are getting crushed this week, right? So don't take it too much to heart. It's a very, very difficult week. A lot of landmines. IPOs on watch. Oh, so let's see here. Big tech earnings wind down with Apple looking for generative AI. I mean, Apple has to mention AI in this, like, and they have to make major strides. They have to lay out some type of game plan because right now they are seen as like dead last when it comes to the big techs, and AI. So they've got to bring something. I'm not saying, go ahead and get Apple calls. I'm just saying, like, if there's an executive on here from Apple, right, also a member of this Kaizen 1% movement, you better throw something about generative AI into the mix, either a partnership or something like that, because Apple needs saving. IPOs on watch as Viking debuts 10% above IPO pricing level. Do not care. IPO equals it's probably overpriced. Never buying an IPO. I advise the same, right? You can do the same, right? Um, but it's all up to you. No official financial advice, right? NFA, disclaimer, disclaimer. Earnings miss, but NYCB, ticker NYCB, soars on new financial targets. United Health CEO confirms $22 million ransomware payment. Again, all these freaking hacks, man. $22 million ransomware payment, and health data is so valuable. They're probably reselling that data on the black market for so much money because healthcare data and health data in general is the most valuable data possible. Tesla pulls back on gigacasting ambitions after cost cuts. Embraer, ticker ERJ, explores making planes to rival Boeing and Airbus. Should probably just try and make planes that rival Airbus because planes that rival Boeing could be paper airplanes, right? Because they stay in the air sometimes longer than Boeing planes do. Shorts may be put to the test as Carvana stock drives higher. Yeah, I heard some crazy stuff about Carvana. Like, apparently they're trying to sell their cars at a loss in order to decrease the stock price. I don't know if this is true. This is like hearsay, but it was interesting. I haven't looked deeper into it. Maybe you guys, you're like me, you hear bits of info and you want to dive down the rabbit hole. But I heard that they were like doing some funny business in order to make their stock be deflated. Maybe it's to remain a meme stock. I don't know. Um, but yeah, I mean, their stock has crushed it over the course of the past year. I think it's the best performing one, across markets, even outperforming Nvidia. But that's because it's in that meme mania, which makes it super super risky. But yeah, might be a fun little side topic to dive into. More chip earnings. Qualcomm beats, gives strong outlook. Good for QCOM. Pfizer, ticker PFE, raises full year guidance amid major cost savings push. That's where all these companies are. Cost savings, right? They're trying to decrease costs. What does that mean? Decrease overhead. What does that mean? Layoffs, right? Google laying off another host of employees. And it's number one to integrate AI, and number two to shift those jobs overseas, because that's another thing that's so important when it comes to AI and why you need to be in that virtual room for the Kaizen event on June 19th through 21st, is because these are the same tools that so and so over in India and over in Vietnam and over in China are using in order to do the job that you do better for cheaper. Right. So if you're somebody who, I work in talent acquisition or something like that for a company, or recruiting, right? You say, oh, I work in recruiting. I can reach out to this many people. And then you've got, so and so who lives in India who's like, I can reach out to 3 times as many people because I actually have a bot that goes out and scrapes LinkedIn for certain characteristics that you're looking for in your target audience. And then that bot is integrated with Slack to send out a pre-posited message to that person. It can send out these messages nonstop. You are much more efficient and effective and provide much more value than that person in the US that needs benefits and time off and this, that, and the third. And they can hire you for less and you can do more. So that's the other reason why it's important. Your job might not be taken by somebody with AI, but it could be taken by somebody that's hungrier, that knows how to use it, and works for a lot less. Right. And inflation might be hitting them over there, but it's definitely hitting us over here. And I doubt they've got to pay as much for a carton of eggs as we got to. So that's another reason why it's so important, because if you're sitting there at your job and you're like, oh, I'm not liking how things are going, da da da, or even if you're sitting and you're feeling comfortable, it's like Survivor out here. I don't know if you watch Survivor. You need to, when you get comfortable, is when you need to be planning your next move. Always. When you're getting comfortable is when you need to be planning your next move. And if you're uncomfortable, then you definitely got to be planning your next move, right? So Kaizen, 1% better daily is what we're aiming for. And then the last headline here, J&J, ticker Johnson, excuse me, J&J, which is Johnson & Johnson, seeks $6 billion settlement to resolve talc-related cancer claims. Yeah, that's tough. I think I still have some of their talcum powder. I need to throw that out. But anyways, throw out your J&J talcum powder. If you're not, make sure you head over to I'mBetterDaily.com and you're in the room for the Kaizen event. That's all I'm going to be talking about because I'm putting this on specifically to take as I'm working on all these other AI things on the consulting side with clients. This is the time that I'm setting aside to make sure that my community has access to that same information instead of going out to hunt it down for themselves. Right. So if you're interested in that, be in the room for that. I know a lot of you are. If you're not, this is the push. I'll keep pushing until that time comes in June. But yeah, we had a great day yesterday. Let's see what the market has for us today. Let's see if we get these daily bear flags to fire or not. I feel like we'll probably have to wait on Apple for that. But let's finish this week strong, operate in patience, and get 1% better. Everybody have a great rest of the day. I'll see you back here tomorrow for our last pre-market prep session of the week. Have a good one.